Hi, my name is Najah and everyone. We're all from Group 5 Section 2. We want to talk about 7-Eleven Company. First of all, my name is Nur Aini Shamimi binti Tubarani and my metric number UDE101083. I would like to talk about the introduction. 7-Eleven was founded by J.C. Thompson in 1927 as the Southland Ice Company in Dallas, Texas. It started as an ice vendor. The company eventually began offering milk, bread, and eggs on Sundays and evenings when grocery stores were closed. The company's name corporate was changed from the Southland Corporation to 7-Eleven Inc. in 1999, and in 2009, 7-Eleven introduced fresh brewed coffee and other hot beverage together with packaged fresh food and bakery for the convenience of customers looking for ready-to-eat hot food. All food items sold in 7-Eleven undergo stringent quality control to ensure tastefulness and freshness. They are the premier neighborhood convenience store. Community building is in the heart of 7-Eleven's corporate social responsibility framework. Next, 7-Eleven Malaysia Holdings Berhad through its subsidiary, 7-Eleven Malaysia Sdn Berhad is the owner and operator of 7-Eleven stores in Malaysia. Incorporated on 4 June 1984, 7-Eleven Malaysia has made its mark in the retailing scene and has been a prominent icon for over 28 years. Besides, there are 7 things people don't know about 7-Eleven Malaysia, which are: new cups for Slurpee was introduced on 21 January 2008. 7-Eleven Day in Malaysia is celebrated on 7 November instead of 11 July, which is the official birthday of the 7-Eleven convenience stores and others. Their vision and mission are to be the best retailer of convenience and consistently serve the changing needs of customers of their convenience. Meanwhile, their values are to understand, simplify, solve, and connect. Last, there's a lot of latest event and happened in 2021, such as 7-Eleven Malaysia recognized as Company of the Year, as Sustainability and CSR Malaysia Awards 2021, date 29 November 2020 at Shangri-La Hotel Kuala Lumpur, and many more. That's all from me.
Salam Sejahtera Madam, my name is Divya Anaprapamohan and my metric number is UDE210197. So today I'm going to explain the calculation and give interpretation on current ratio, acid test ratio and inventory turnover ratio. First of all, current ratio. To get current ratio, as you see at the slide, is current asset divided by current liability. So, according to the ratio by year 2019, it is 0.55 times and it increased by 0.63 times in year 2020. So, for acid test ratio, so the formula is current asset minus inventory divided by current liability. Acid test ratio is most stringent version of liquidity ratio. So the acid test ratio in year 2019, it is 0.223 times and it increased to 0.31 times in a year 2020. So lastly, inventory turnover ratio. On average, the inventories purchased and sold by 7-Eleven company need to be replenished 7.01 times in year 2019 and 6.29 times in year 2020. So that's all from me. I pass it out to Nazif.
Assalamualaikum and hello everyone. My name is Nazifa Batusha Binti Nazib and my metric number is UDE210202. So today I will present about accounts receivable turnover ratio, accounts payable turnover ratio and efficient ratio concern about earning per share. Firstly, the account receivable turnover ratio is very important because it is a current asset. If an organization can cover account receivables within a set time, then the capital efficiency of the organization can be improved. The formula used in this calculation is credit sales will be well divided by trade debtor, which indicates several times a year during the accounting period. The organization will acquire the account receivables. Here we can see that in 2019, our credit sales are 2,284,451 and the trade debtor are 75,900. When divided, the total turnover that the company will receive in 2019 is 30.10 times, while in 2020, credit sales were 2,471,778 and trade debtor in the year were 96,183. When calculated, the total turnover of account receivables in 2020 is 25.70 times. Next, we turn to the next line of discussion, which is the accounts payable turnover ratio. Accounts payable turnover exists to find out how quick the cash outflows are in a firm. The formula used to calculate the accounts payable turnover ratio is credit purchase divided by trade creditor. In 2019, we can see that the credit purchase are 1,620,671 and the trade creditor are 403,259. After collecting the amount and indication of the extent to which the cash flow in the firm is 4.02 times. In 2020, credit purchase amounted to 1,170,141 and the trade creditor amounted to 451,498. After dividing between credit purchase and trade creditor, the number is an indication of the extent to which the cash flow in the firm is 4.12 times. Here we can see there is an increase of 0.10 times in 2020. Then we move on to the next discussion slide, which is the efficiency ratio, which measures the efficiency of a business managing inventory and measure the ability of business to manage assets and liabilities well. I will present about earning per share. Earning per share is calculated using the following formula. Earning attributable to ordinary share multiples with 100 cents and divided by the number of ordinary shares in issue. Income per share was created to measure the amount of net income available for company share. In 2019, we can see that the calculation is 128,928 multiplied 100 cents and divided into 83,195 share unit. Then for every one ordinary share held by shareholder, 7-Eleven Malaysia Holding Berhad has earned 145.97 cents of income, which may either distribute to ordinary shareholder as dividend or be kept in the firm as retained earning but still belong to the ordinary shareholder. While in 2020, the calculation uses is 157,243 times 100 cents and divided by 104,135 unit share. Then every one ordinary share held by shareholder 7-Eleven Malaysia Holding Berhad has earned 150.10 cents of income, which may be either distributed to ordinary shareholder as dividend or be kept in the firm as retained earning but still belong to the ordinary shareholder. That's all from me. Thanks for listening. I will pass the presentation to the next presenter.
My part is return on capital employed in 2019. My answer is use the earning before interest and tax, divide the capital employed, multiply 100%. So my answer in 2019 is 120,263,000 divide 579,945,000 plus 102,111,000 multiply 100% equal 18%. So my explanation in 2019 is for every 1 ringgit of finding provided to the management of 7-Eleven Malaysia SDN BHT, the firm is able to earn the return of RM0.18 annually on average. Return on asset, how I can get is use the profit after tax divide the total asset multiply 100%. So my answer, return on asset 2019 is 54,084,000 divide 1,422,019,000 multiply 100% equal 3.80%. So my explanation in 2019 is for every 1 ringgit of asset that is made available to the firm or that are firm invests in, the management of 7-Eleven Malaysia Holiday Berhad is able to generate a return after tax of 0.038 ringgit. So my explanation for return on asset 2020 is for every 1 ringgit of asset that is made available to the firm or that are the firm invests in, the management of 7-Eleven Malaysia Holiday Berhad is able to generate a return after tax of 0.0174 ringgit. How I can get the return on equity is use the profit after tax divide the total shareholders equity multiply 100%. So my answer, return on equity 2019 is 54,084,000 divide 102,111,000 multiply 100% equal 52.96%. Lastly, for the return on equity 2020 is 35,353,000 divide 161,221,000 multiply 100% equal 21.93%.
Hello madam, my name is Nurul Nabila Bidisham student and my matrix number is UDE101006. So I will present about leverage ratio. Leverage ratio is investigate how a firm is being financed and provide indicators as to the extent a firm is able to meet the interest payment. So there are two important ratios, which is debt ratio and interest cover ratio. Firstly, for debt ratio of 7-Eleven in year 2019 is 92.8%. It indicates that slightly more than 92.8% of the firm's total asset is financed using that long and short-term debt. For year 2020, debt ratio for 7-Eleven is 92.1%. It indicates that slightly more than 92.1% of the firm's total asset is financed using that long and short-term debt. Next, I will explain about interest cover ratio of 7-Eleven. In year 2019, interest cover ratio is 2.76 times. It means that the firm has earning before interest and tax that currently cover up to 2.76 times its existing interest expense. Firm may still be able to take on further borrowing. In year 2020, interest cover ratio is 2.17 times. It means that firm has earning before interest and tax that currently cover up to 2.17 times its existing interest expense. Firm may still be able to take on further borrowing. That's all from me. Thank you.
Hi, Assalamualaikum Madam Najiha. My name is Nurimatin Suryadi. My matrix number is UDE101098. I will present about profitability ratio for 7-Eleven Malaysia Holdings Berhad. So, what is profitability ratio? Profitability ratio indicate how efficiently a company generates profit and value for shareholders. There are three important ratios that we have to emphasize, such as gross profit margin, operating profit margin, and net profit margin. What is gross profit margin? Gross profit margin measures how much a firm earns from its revenue less the cost of goods sold. The gross profit margin for 2019 is 31.36%, which means 7-Eleven Malaysia Holdings Berhad has earned sufficient revenue to more than cover the cost of sales. Hence, the positive gross profit margin 3.136 cents of gross profits for every 1 ringgit of the revenue made by the firm. The gross profit margin for 2020 is 28.43%, which means 7-Eleven Malaysia Holdings Berhad has insufficient revenue to more than cover the cost of sales. Hence, the positive gross profit margin 2.843 cents of gross profit for every RM1 of the revenue made by the firm. What is operating profit margin? Operating profit margin measures how much profit company makes on $1 of sales after paying for variable cost of production. The operating profit margin is 5.09%, which means for every RM1 of revenue earned by the firm, the revenue is enough to cover up to RM0.9491 cent of the firm's total operating expenses. Operating profit margin for 2020 is 4.34%, which means for every RM1 of revenue earned by the firm, the revenue is enough to cover up to RM0.9536 of the firm's total operating expenses. There are two formulas that we can use for net profit margin by using profit before tax and profit after tax. By using profit before tax, net profit margin for 2019 is 3.25%, which means for every RM1 of revenue earned by the firm, the net profit earned is RM0.0325 cent. By using profit before tax, net profit margin for 2020 is 2.57%, which means for every RM1 of revenue earned by the firm, the net profit earned is RM0.0247 cent. By using profit after tax, net profit margin for 2019 is 2.29%, which means for every RM1 of revenue earned by the firm, the net profit earned is RM0.0229 cent. By using profit after tax, net profit margin for 2020 is 1.39%, which means for every RM1 of revenue earned by the firm, the net profit earned is RM0.0139 cent. That's all for me. Thank you.
So for recommendation, initially 7-Eleven is well-known franchise in the world as in Malaysia. Based on the efficiency ratio, it can be said that investing in 7-Eleven to be a good choice as its profit ratio are good as compared to its competitors. Besides that, the ratio are important in determining such as profitability, liquidity, and market ratios. In 2020, revenue is better than 2019, so 7-Eleven is good in terms of profitability. So other than that, for gross profit margin, the higher the gross profit margin is much better because it shows the company did well in managing its costs of goods and sold, so the company has more to cover the operating and financing. So 7-Eleven Malaysia Holdings Berhad has to generate a higher gross profit margin because it indicates the company's sales are sufficient enough to cover costs. Other than that, for operating profit margin, the high operating profit margin is better than low operating margin. If 7-Eleven Malaysia Holding Berhad generates more percentage of operating profit margin, it will be good indicator that the 7-Eleven Malaysia Holdings Berhad is being well managed because has enough money from business operation to pay variable cost of production. So lastly, for net profit margin, the higher net profit margin is way better than a higher net profit margin because it shows how much profit will be generated from every RM1 in sales. 7-Eleven Malaysia Holding Berhad has to gain a higher net profit margin to get more profit. So that's all from me. Thank you.